Hi, fellow traders. What's happening? I hope everybody had a great week this week. We made it to Friday. I know it's been an incredible week for me. Today really bookend a really nice week. I don't know if this might be the biggest week I've had this year, which this year is really, it's just getting started. But this is the best birthday week I've had trading. I think every year up to this year, I've had a struggle thinking that coming in looking for a good week for my birthday, but I wasn't even thinking about it this week and just realized today my birthday is tomorrow. And I needed to pack and get out of here. So I'm hitting the road as soon as I get through with this video. But it's been an incredible day. And today was a prime example of what we talk about all the time, where base hits, they do add up. Now, some days all we get are base hits. And at the end of the day, we've got a decent, piece of change. It grows our account. So today, we started out with base hits, and they turned into home runs. So if you get a good on base percentage, meaning you get enough base hits going, eventually you're going to get a couple of home runs. And that's exactly what we did today. So we call that playing Moneyball. If you guys haven't seen the movie, I really advise you to read the book. I think you get more out of it if you read the book. But there is a movie that they made called Moneyball that's made off the book. So that's basically the mentality that we have coming in some days where we don't get follow through in the market. So early on, the market wasn't following through like it should. And you could see up in here when we got the wick, it was kind of choppy. And then the market kind of smoothed itself out. So let me show you how these base hits turned into some money. They turned into money balls. All right, so the first trade out of the gate for us was SQ. This was on the aggressive break of the pre-market high. We didn't wait for the 5-minute candle yet. This is the strategy that I trade when I feel like the market has an aggressive feel to it coming into the open. And I think we could bank on some good directional volatility. And that's exactly what we did here. I took profit, but messed around. As soon as I took profit, my cat jumped in my lap, caused me to accidentally click the button again. And so it took me, all out. Ended up taking the whole trade off. And sure enough, it pulled all the way back. So had I not done that, I would have given up some of this profit and stopped out at break even. So, this is a nice little base hit thanks to my cat. And so here we get in again. We get another base hit. I get in and I take profit up here. I got, I take profit up here. And then I turn around and accidentally add 100 shares back. So at this point, I'm like, you know what? Maybe I shouldn't trade. Because here I had this hiccup, but this was positive. Then I had this that kind of turned out to be positive. But this happened to be a base hit too. So I've got 2 base hits going into my third trade. 2 kind of inadvertent execution errors, but they both turned out, pretty good on the positive side. So I was looking at AFRM. This one, well, we'll talk about that one last. Let's do AMD first. So AMD, I got in it here, shorted it on the break of the pre-market low and got a base hit. Took profit here, got stopped out at break even. Got in again on the break of this level, 122.50 level. Got in, It bounced a little bit. You got to understand, when you get in trades, they do not always go in your favor. Or if they do, there's nothing wrong with them bouncing and coming back and retesting levels. This is why you have to be, you really have to be disciplined. And if you're trading your P&L, this would have stopped you out. A couple of guys in chat were trading their P&L and they said they got stopped on the pop. Why? I have no idea, because this shouldn't have been anywhere near your max loss stop. It did not take out the technical level. There's nothing that would cause you to stop out of this trade other than you trading your P&L. You saw it go down, you were green, and then it popped up and it turned you red, and you took it off because you thought it was going against you. You can't do that. You know, this is the number one issue that I work with traders on when we do one-on-one mentoring sessions, is trying to get them out of this, to separate them from their P&L, disconnect from the money, and focus on the trades. All right, that's focus on the chart. Focus on executing your trade plan in the chart. So, you know, here we get in here. The pullback got the first target. I kind of split this up because I didn't like what I was seeing here. You can clearly see that we were having trouble at 121, and the market was telling me take profit, and that's exactly what I did. Eventually it worked itself out, made it to the daily 20, which is what this level is. I took profit here. Next target, normally I'll take some off halfway, but because I did this, I needed to wait until we got to the level. I got here, took some profit. It bounced a little bit, rejected the 9 again. And once we claimed, we took out this 118.13 level, I added to the position I had left and just started taking profit again. Finally had to this was my this 111, it was actually 111.71, but I had my order at 111.75 to take profit here, but it started to bounce going into the close, and I ended up taking it off. So you can see these base hits turned into home runs. You know, being on base, having a good on base percentage, ended up turning these into home runs. And I was able to work this all day. This is a trading that I love. When the market is trending like this, this is when I am in love with the market and I can make the most money. But this was the best trade. Now, I did look at AFRM, and I identified this as a potential all-day hold. Number one, it was on short sale restriction. So we were less likely to get big moves to the downside. So that made it a candidate for me holding all day. Number two, it's been getting beat up. This wasn't anywhere near oversold. It was very heavy. There were a lot of people wanting to bail out of this. So it just felt really heavy, and I felt worst case scenario, we could get to this 48.50 level here on the daily, or 48.62, which is right here. And the best case scenario, we can get to the 52-week low. And if we did that, we can probably, the bottom can fall out. We can see 45, maybe even below. So everything about this looked good for me for an all-day hold. I haven't covered this in BBT yet, but I have covered this in my chat room over the last several years. You guys know this is a strategy that I love when the market's trending. The market just haven't it just hasn't been giving us the big trends that I like. I really haven't gotten hooked up with this since COVID, to be honest with you. But we're starting to see these now with earnings coming in. The day after earnings, stocks that break down, they can bleed all day, and that's kind of what this one did. So this turned out to be a really good all-day hold. They're designed to be managed on a 60-minute chart, not a 5-minute chart. And you're going to have a little bit bigger risk, but you're going to have a lot larger reward for that risk. So that was AFRM. That ended our day. Just to give you an idea of where we ended today, this is 27.34.40. No earnings trades, no aftermarket earnings. All week we boosted our P&L with aftermarket earnings trades. Then no aftermarket earnings on Friday. This is all intraday. So, I'm going into this weekend ecstatic. Hopefully I can contain myself Monday when we come back. But really, really solid day. Has given me a really solid week. I haven't had time to total everything up and then put it in, put it together. But in my equity curve and all that. But I'll do that first of next week. But that's where we ended today. So really, really happy going into this weekend. You guys be safe. There won't be a Sunday session this Sunday. Like I said, I'm going out of town. I don't plan to be able to get up Sunday morning to do it wherever I am. And can't do it Sunday evening because it's Super Bowl Sunday. But next Sunday we'll be back on schedule. And I'll be doing it then. But keep an eye out for the newsletter. I will get that out, and you will have a watch list. Probably won't execute any watch list next week. I don't foresee the market recovering in time for us to take any swings, but you never know. So you guys enjoy your weekend. I will catch you Monday morning.